What's up, everybody? My name is Jake Orsborn. Thank you very much for watching my presentation, and let's get started. So the purpose of this time series analysis was to analyze a stock. I chose BMW stock to be able to make a future prediction on what the next period stock price would be. I collected 50 observations of weekly stock prices from Yahoo Finance. The time period goes through June 16th, or from June 16th, 2014 to May 25th of 2015. So that's Mondays from June 16th to this previous Monday, the 25th. And again, my goal was to forecast the next period stock price, which lands on this coming Monday, June 1st of 2015. The forecasting methods that I chose were regression, 3-week weighted average, and exponential smoothing. Now, the weights that I found for my 3-week weighted average was based on Solver. Solver spit out these numbers for me, kept my mean average percent error pretty low, and that's what I like to see. Same thing with exponential smoothing. Running Solver, it gave me a number very close to 3. For this presentation, I rounded it to 3. So, failed forecasting methods, or rather less desirable, I would say, is seasonality. Seasonality definitely was a fail because just based off the nature of the stock market, it's hard to find any sort of seasonality. The stock market kind of changes quite a bit. And then when I tried moving average, basically when I did 3-week weighted average, it just had a much lower mean average percent error than moving average. So I chose weighted average over moving average. Now, my regression analysis, it gave me a forecasted price for this coming Monday at $111.54. My mean average percent error was a decent number, fairly low, but in comparison to the other two, it wasn't the best, and we'll get to those. My tracking signal was very close to 0, so and that's expected because regression is just linear. And so 3-week weighted average forecasted price came out to $104.38. My mean average percent error was only 2.89%, so nearly 2.9%, which is a pretty good number. Using exponential smoothing method, so the graph forecast is in green. It follows very, very closely to the actual price. Mean average percent error was 3.90, pretty close to 4%, which is pretty low, but comparatively not as low as another forecasted method. The forecasted price came out to $106.33. So comparing the three forecasting methods, the mean average percent error for regression was 7%, roughly. Weighted average was roughly 3%, and exponential was roughly 4%. So as far as this goes, the lowest percentage, so the most accurate, was the weighted average, which the stock price came out to $104.38 for, again, that's projecting for this coming Monday of 2015. Now, the previous Monday closing stock price was at $104.08. So if you're wondering if I should buy, if I should short the stock, whatever, the stock overall, you see the average projected price of the 3 came out to $107.42. So overall, my projection methods show a rising stock price. So if I were to say one way or the other, I would say that buying the stock would be the best decision. So in conclusion, a 3-week weighted average method came out to be the most accurate, just due to mean average percent error. The stock price doesn't rise too much from the previous Monday to this coming Monday, but overall, my projection methods all show that the stock price will inevitably rise. So I would again say that the best thing to do would be to buy the stock. That being said, however, the nature of the stock market is, as a lot of us might have heard, it's sort of a fugazi, or a fugazi, or a woozy, or a wazi, which means that nobody really knows if the stock's going to go up, down, sideways, or in circles, and least of all the stockbrokers. So, it's still a risk, but based on my projection methods, I would say that buying the stock would be the best thing to do, because BMW stock price, again, based off my projections, is going to rise. So that's all I have. Thank you very much for watching my presentation, and good luck on finals, everybody.